Perstima is a producer and supplier of tinplate with established operations in Malaysia and Vietnam. It also has an operation in Philippines that started in 2022. The tinplating industry is a mature one with a projected single-digit growth rate. Tin and steel are raw materials used. Both materials have cyclical prices, making Perstima a cyclical company. The Malaysian operation is the biggest revenue and profits contributor. In 2024, the Philippines operations are still running at a loss. Revenue growth was mainly from the Malaysian and Vietnamese operations with single-digit growth rates. Profit growth tracked revenue growth except for 2024, when was a large loss. This loss was due to firstly declining revenue. Another reason was the declining gross profit margin due to lower sales and the weakening of the ringgit. While there was profit growth, returns seemed to have a long-term downtrend. The main reason for this was that capital grew at a faster rate than profits, possibly due to the startup of the Philippines operations. In a low revenue growth situation, the focus should be on efficiency improvements. But there is no clear evidence for this. A troubling picture was the high reinvestment rate that averaged 88% over the past decade. This is due to the Philippines startup, as the rate prior to this averaged 25%. Compared to its Bursa peers, Perstima had the best revenue growth rate from 2013 to 2023. Its higher ROC, EBIT margin, and EPS demonstrate efficient operations, profitability, and effective capital use. Overall, Perstima outperforms its peers. Financially, it has some strong points. Based on its cash position, I would rate Perstima as moderately strong. The concerns over the reinvestment rate and debt-equity ratio prevents it from being classified as strong. Its intrinsic value of Rm 3.21 per share was lower than its book value, but higher than the market price of Rm 2.04 per share. There is more than a 30% margin of safety. Perstima challenges ranged from its investment in Philippines to declining returns. But there are also positive points, such as its strong financial position and good peer performance. Given its good margin of safety, this is an investment opportunity rather than a value trap. The information presented is for educational purposes only. For more details, read the blog article. Thank you.